Hello guys, and welcome back to another new video. This is the Alchemist and Knight channel. So if you are new to this channel, don't hesitate to subscribe to the channel. So if we make new video like this, you are going to be aware of it. So without wasting your time, this topic is the Malaysian SNR basic, the MNSNR basis. I'm going to teach you a role how this trending strategy is being done. So guys, if this is what you are interested, like I said earlier, to click the bell button to subscribe and like. Also drop your comments on how you think, or if you have any suggestion, I'm already here for you. So first of all, before we start, the Malaysian SNR, I have courses under this. This is the first topic and the introduction to the MNSNR basics. So we are going to treat these all basics on the next videos. I'm going to make a specific videos on each of these basics. So this, let me introduce the MSNR basics to you. This is a strategy in trading approach that's built around market structure plus key level plus reaction. It is mainly used in forex, crypto indices, and traders like it because it is simple and it simplifies decision making to the trading steps and how to make easy money trading plus low risks. Yeah. So the first step is the market structure. Market structure basically is these highs and lows. This is an illustration of the Malaysian SNR in general. So let's get started. Simply, this is normal market structure. We have highs and lows. We have highs and lows. So this is the market structure. The moment the market broke the above structure and leave some sense of liquidity in this place, plus an entry, maybe a fair value gap or any PDR used for entry. So this is the market structure. We have different kind of market structure. Market structure breaking highs and lows. Market structure breaking highs and lows. So the moment the market fails to break a new high and it breaks a low instead, we tend to say the market has changed structure. So now what are we looking for? To start selling. The market is not longer in an uptrend. So now what we will be looking for is to sell when it is selling. So we are going to start looking for sales on the market. This is what we call market structure. We call this change in structure plus an entry around the place looking for short. So this is just a little example of market structure. I'm going to explain it well better on how to look for it, how to look for the range cycle on this, and how to place your trades with a minimal easy losses and control your risk management. That is on the first video that I'm going to do after this. So just stick to the channel, subscribe to it so that if I drop it, you will be the first to know and to come for it. So this is just it. End flows. This is the market structure as I just explained earlier, the order flow of the market. So First step is to identify the market in the direction of it. That is, if we are going up, we are in an uptrend, making this series of higher highs and lower and higher lows, higher highs and higher lows. That means we are in a series of uptrend. While in a downtrend, such as from a place a range like this, we are in a downtrend. Um, like this, we are in a downtrend. So in this downtrend, the market gives us a higher low, and a lower high. Higher low because it doesn't break this high, and a lower low, higher low, a lower low. So that is to identify the trend, and we have a range in market. I'm going to explain this much better in the next video because we are not on the topic now. Market will be ranging in such a position, having no specific direction in general. So I'm going to show you on how to trade on this, how to trade on this, and how to trade on this. That is on this first topic I'm going to do after this video in this playlist. So guys, this is all I want to explain on this market structure. Then key levels. The key levels market strong. We should mark a strong support and resistance zone where price reacted multiple times in the past. For example, this place making series of higher highs and higher lows, higher highs. In this place, this is our key level. This illustrates our key level, and the market touches this first time, reverses, fail to take the lower low, also break higher, and market retest. So we have how many touches? This is our first touch, and this is our second touch, making this a resistance. First touch, second touch. So this is how the market moves, and this is how to mark your key levels. This is our key levels. So we can move on and note these key levels are very important because they are your decision area where the market is likely to respect and reject. Price always respect and reject this place. Price respect this area of liquidity, drop back down into the lower range. Price tends to break it, but it still have lesser liquidity to push the market upward. So it also retest and then keep going upward. So for example, the previous day highs and lows, the previous day's highs and lows are also where there is liquidity. I forgot to add liquidity and entry. Liquidity, I'm going to add it, making like the videos are going to be for the full course of this Malaysian SNR. I'm going to make almost 6 videos, complete guide, and after them you are going to be like a pro trader when it comes to Malaysian SNR strategy. So guys, then I'm going to introduce liquidity. That is where liquidity education comes into being. The demand, supply and demand area are also key levels and psychological levels, like on euro 1.2. On euro, I'm going to, I don't want to switch the time frame, but today's date is September. You can check it around this place. This is on a 4-hour time frame, and now this is September, Friday 12 2025. So that is it for this. Then strong, let's go to number 3, introduction. Strong rejection. area, that is SR, strong rejection places. So strong rejection places is not something that is new to you, because normal chart price and action you guys have taken is still what is being repeatedly in this place. So wait for confirmation at the key levels. Waiting for the confirmation at the key levels. A strong rejection can be, more especially this. On this illustration I've made a lot. This area that I have marked, it can be used as a strong rejection area, right? So the pin bar, there is what we call a pin bar on the candlestick. Let's assume this is a candle, then a candle at range. This is a candle at range. It mostly have a long wick, right? A long wick. Let's turn it to black. So this wick is what is called rejection, and let's assume this is on a rejection area like this. That means price have rejected this place and it is not going to go down again, rather pumps, price moves higher, it skyrocket. So this is it. Then entry and risk management. But before that, I've made some mistake. I'm going to introduce liquidity and inducement. So liquidity and inducement is whereby the market tends, you will have some multiple areas of interest, point of interest, but the market will tend to sweep some POIs to take where the real liquidity pool is resting. I'm going to explain that on our series of videos that I said I'm going to click. This is just the part one, the introduction, and I'm going to take the basis one by one in this channel. So we have the fourth, which I'm taking it to the fifth, the entry and the risk management. So after reaction, after all of these reactions, depending on where you are taking your trade to, the the entry in a direction of a structure is also a very important key role to be considering when it comes to this beautiful strategy. So the place to place your stop loss is below or above a key level reaction also matters. Like I said, this is a rejection block. After you have seen it, it serves sometimes as an order block. So where do you put your stop losses? It matters. Let's say this is a breakout. You are expecting some candlesticks to push higher. Right, let's assume this as our candlestick. Nice candlestick to push higher. And you know, normally market doesn't just push up higher like this, it comes along with wicks, which is known as manipulation, which like the ICT stated, accumulation, manipulation, and distribution. So it comes like this. Then how did you place your entry around this place? With your tight stop loss. This is what I'm talking about. A very tight stop loss to catch the next move of the day. Let's say something like this. Alright, something like this. How to manage it and find it easier. This is what I mean. So you target nearest opposite key level or use risk reward. You can target what I mean, you can target the next opposite key levels. So that means we can target from this key level to this key level. For instance, let me mark another new key level for us. This is another key level. Sorry. This is another key level. So from this key level to this key level, because this is key level because it has two touches on it, price is respecting the place, also price is respecting this place, is respecting this place. So we can trade from this key level to this key level. All right, we can do something like this. Then there is another entry risk to reward ratio. There are some traders that plans their trading entries based on risk to reward ratio. Some 2 is to 5, 1 is to 10, 1 is to 100, based on pips. Some just risks some few bucks, risking like 20 pips, looking for 100 pips, which is a very good risk management. I'm going to introduce it. Like I said, I'm giving 6 series of lectures that will make up the Malaysian SNR strategy, the MNSR strategy. I'm going to introduce liquidity and inducement. I'm going to introduce the sixth one, which should be what I just said right now. So guys, this is just it for these lectures, and I'm not going to go through live um, chat due to time, and I'm maintaining things. If you want to look after your journey well, I would love you to give me a chance to guide you on that. So let me just prove a small little reaction on how this Malaysian SNR works. I'm just going to show you. You can see this is a trade. I have closed so many trade on this place. I've closed so many trade. Where is the liquidity resting? This is a liquidity. It comes and induce people thinking that the price is going to push higher and break the structure. Either the price did the work here, and now this is not yet a missing entry. The market is just casual liquidities, which I'm going to explain in the next video. So if this is something you're interested in, please don't hesitate to like, share, and comment under the video to show your support. This is it. I'm going to explain everything about this. Is my favorite pair. I'm going to explain my explanation based on this. So guys, see you in another video. Thank you if you have reached to the end of this video.